Thank you for watching the CEO Barbecue. My name is Antonio, and today I'm going to be in multiple places at the same time as I'm going to West Central Mexico as well as Red Lake, Ontario in Canada. Joining me on the barbecue today is Bob Archer, the CEO of Pinnacle Silver and Gold Corp. Before we get into it, though, I would like to warn you that we have not received monetary compensation for the production of this video from the company that's being interviewed. Please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital is at risk, and I am neither a licensed financial advisor nor do I have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you and told you about, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Pinnacle is listed as PIN, spelled as PINN on the TSX Ventures Exchange, where over the last 3 months, an average of about 100,000 shares have traded daily. The stock's 52-week high is 9.5 cents, and its 52-week low is 2 cents. With a market cap of just under 3.5 million Canadian dollars and 81.5 million shares outstanding, today this is a 4-cent stock with a 50 and a 200-day moving averages at respectively, and I am rounding up 4 and 3.5 cents. There are 24 million warrants outstanding as well as 3.5 million options, bringing the number of fully diluted shares to almost 110 million, meaning an increase of about 34% in shares outstanding can be expected if all dilutive securities get exercised, which would then result in about a 25% ownership dilution if, and that's of course a big if, but if those actually get exercised. About 14% of that on the shares outstanding basis is held by insiders, by the way, so that's something we'll touch upon in the conversation. I do want to caution everyone that on February 25, Pinnacle did close a part and parcel private placement issuing 20 million shares at 4 cents and 10 million 2-year warrants at 6 cents. So keep that in mind when I'm going through the financials as well, because the effective date on the last officially filed interim financial statement is October 31st. That's of last year, of course, and the company had recorded just over $500,000 in current assets, most of which at the time about $400,000 was recorded as marketable securities, which note 6 of the financial tells us are represented by Agia Resources shares, which Pinnacle received in connection with the sale of a Colombian subsidiary that the company had previously owned. There wasn't much cash to speak of at the time as of October 31st, but again, just late last month, Pinnacle did close that $800,000 financing, which again, Bob and I will discuss later on. On the other side of the October balance sheet, I see about $500,000 in current liabilities, mostly in the form of account payables and accrued liabilities, as well as a small portion that is due to related parties. Whereas the non-current side of the balance sheet shows a loan payable and some long-term account payables, including about a $200,000 or $200,000 worth of related party payables, resulting in total in about $715,000, again, as total liabilities. Moving on to the expenses for the 6 months that ended on October 31st, Pinnacle recorded a total of $386,000 in operating expenses, although that includes over $80,000 in share-based compensation. So call it 300 grand out of pocket cost for the 6 months, or an average of 50,000 Canadian dollars on a monthly basis. I typically split that expense in an exploration versus non-exploration related costs, but there was no money spent on the properties in that period. And the reason behind that will also hopefully become clear later on in the conversation. About 40% of that $300,000 spent for those 6 months was spent on marketing services for an average of $21,000 a month. And administration and office costs represented about a third, let's call it 35% of the total expense. with various smaller expenses adding up to the rest. Again, I'd normally give you the drilling to marketing spend ratio here, as well as the exploration to administration ratio, but that's not available with this most recent report. So I encourage you to make those ratios for yourself by the time you're watching this, because these numbers represent just 2 quarters, about 6 months ago from now. So I'm not, on top of that, I'm not infallible. So I might be making mistakes in my reading and or interpretation of these numbers. And to stay safe, or stay on the safe side at least, although this is a risky business, you should still visit setterplus.ca yourself to make sure you're getting the full picture. For Pinnacle, that full picture is split between multiple projects and multiple jurisdictions, with a gold and silver target in the Sierra Madre belt of the Durango region in Mexico. They have a past producing gold mine project in the Red Lake district of Ontario, and a gold target in the same Red Lake district of northwestern Ontario, though this is an exploration target. And again, hopefully Bob and I will touch upon all of these further on in the conversation. But first of all, Bob, thank you so much for sitting down with me today.
My pleasure, Antonio. It's great to be here.
Pleasure is mine, of course. And this is your first time on the CEO Barbecue. So we have a couple of obligatory questions here, starting off with yourself. Who are you, and why do you think you're the right man for this job?
Well, I've got more than 45 years in this business. I'm a geologist, and I guess a little bit of history. Um, Went to university in Sudbury, which is a great mining town, and spent 15 years working for major mining companies like Newmont, Placer Dome, Rio Algom, Noranda, all the usual suspects, and then moved into the junior sector in 1996. And it was that same year that I actually started working in Mexico. So I've been working in Mexico as well as other jurisdictions for the last almost 30 years now, 29 years. So I think, there's a lot of experience that I bring to bear in that regard. And running different companies down there and elsewhere, but primarily coming out of the dot-com era, 2002 sort of time frame. I decided that I was tired of trying to fight the markets and trying to raise money for junior explorers, which was extremely difficult through the late 90s and early 2000s. And ironically, it's exactly where we find ourselves now. But back at that time, I reached out to a Mexican colleague and told him that I was looking at starting a new company, but focus more on the production side of things. Trying to take on a past producing company and past producing asset and bring it back into production in a fairly short period of time, and then try to build the company out of cash flow more than always going back to the markets, which had proven to be so challenging over that time frame. And so, we went ahead with that. Found our first asset in 2003, which was the Topia mine in Durango, and then proceeded to find a shell company that we could roll that into, and that company was Great Panther. Great Panther Oil and Gas at the time. And so we went through a kind of a change from oil and gas into the mineral sector, and got approval for that in February of 2004. And so, from starting effectively with the two of us and an idea, we took that first acquisition at Topia and built what ultimately became a mid-tier silver gold producer.
Were you? I'm
And
sorry for interrupting here, Bob. Were
yeah,
you
sure, of
doing
course.
Were you doing oil and gas before that, or was that
I
just the name of
wasn't
the company?
personally, no.
Okay,
That was the company. I was just a colleague that I've been doing some work with that was the director of this other company, and
right.
so it was. I wasn't involved with Great Panther previously. We just used that as a shell. They rolled it back, cleaned it up, and we vended in our Mexican subsidiary with which we had used to acquire the Topia mine. And so that's kind of how we launched the whole thing.
Right.
And so then, going forward, Topia at that time in 2004, it had been dormant for 5 years, but the plant was there. It was about 150 tons a day at the time. And, we set about refurbishing the plant, rehabilitating the old mine workings, doing some drilling, and by middle of 2006, so about 2 years later, we had the mine back in production, and it's been in production ever since. Of course, Great Panther is not around anymore, but it's now owned by Guanajuato Silver, and I think they're up to about maybe 250 tons a day. But that mine has been in production, aside from those 5 years, it's been in production since, I believe, 1952 or 54, when Pinoles, which is now Fresnillo, built the mine and put it in production at that time. So that was our first acquisition, and we went on from there the following year to acquire the Guanajuato mine in central Mexico. That is, by anyone's definition, a world-class deposit. It's the second largest silver deposit in Mexico, one of the largest in the world. And we initially shut that down for about 6 months to sort of optimize the operations a little bit, and then had that back up and running by the middle of 2006 as well. And so just continued to build up both of those operations over the course of the next number of years. 2010, we discovered a new ore body just outside of Guanajuato, and had that in production within 3.5 years. And so it's a fairly short time frame, but largely because we didn't have to build a new plant. It was on our property, but it was within trucking distance to the main plant. So that was the nice thing, and easier to permit and so on. So just grew production, and at its peak in 2011, when silver prices peaked at $50, our share price peaked around $5, and our market cap was about 600 million at the time. So basically, from 2004 to 2011, we had built a $600 million company from nothing, from two guys and an idea. So with that in mind, um, uh, sort of fast forward to where we are now with Pinnacle. I took over this company. It was previously called New Range Gold. I took it over in 2021, and we changed the name to Pinnacle last year. And just because we've been coming through a very similar scenario, where it's been very, very difficult to raise money for junior exploration companies, I've just sort of gone back to what we had done before, and just trying to sort of reinvent the company in a sense, just taking on the same business model of taking a past producing mine and trying to bring it back into production fairly quickly, and try to build the company out of cash flow as much as possible.
Hmm.
There will still obviously be some equity financings, but if we can get the project up and running, and start generating some free cash, then that's money that we won't have to raise in the market and dilute shareholders.
So
So yeah, so that's kind of brought us to where we are now. So I'll throw it back to you, and if you want to fill in the gaps.
loads to talk about there, and hopefully we'll get to all of that today, Bob. You said 2021. I thought it was 2019. I saw your name in a news release in 2019,
Mhm.
January 2nd is what I wrote here. And maybe you can talk to me about that, because again, Pinnacle just went through a name change, and maybe a bit of a refocus again here after a deal fell through in late 2023. So what exactly happened here over the last 6 years, if we start from that 2019 deal and or
Yeah,
2019 news release, and why is it changing? Why is this time different? What's going on?
well, it actually started a year before that. I joined the board of New Range in 2018. So I was just a director for that first year, um, and but I took on the role of CEO in 2019. And essentially, the idea was, I would look after the capital markets side of the business, and the fellow who was president and CEO at that time and a co-founder of the company was going to look after managing the project, which was in Nevada, Pinnacle project. And since Bob lived in Reno, it was it's sort of a natural progression in some respects. It allowed him to focus on managing the project while I looked after the market side. So that we did that for about yeah, 2 years, I guess. And but through that time frame, as everyone will recall, we got into this little thing called a pandemic, and of course that played a role in pretty much everyone's lives, and professional and personal. And for us, having the project in Nevada, and with Bob being based out of Reno, it was good for a while because we could continue to work the project through COVID, even though I wasn't able to get down there myself with all the travel restrictions. But for variety of reasons, which I don't really want to get into, by 2021, things were not working out the way we would have liked. And so it was just time to make some changes. And Bob retired, and I took over the company, and so took over, yeah, took over everything really: president, CEO, director, chairman, chief cook and bottle washer, all that sort of stuff. And so, we did a bit of work on our North Birch project in Ontario that following winter of 2022. And we ran into some very strange weather up there where it had been super cold when we tried to set everything up. It had earlier been quite mild for First Mining, who was developing the winter road to get in there. So we were delayed getting in, and then suddenly it turned super cold, like -40 type temperatures, and
Oh,
trying to get in there for drilling. So it was a tough go to get started. And then we managed to drill 2 holes, and then the weather completely turned on us again, and got mild to the point where the winter road started to melt. It was hard to get around, and the drilling company actually told us that they wanted to pull out so that they didn't get stuck. And so we ended up having to terminate the drill program a bit short. And so then we kind of regrouped after that, and I looked at an opportunity to potentially buy um, a mine from Great Panther that they had in Peru, the Coricancha mine. And that was really the last thing that I had done with Great Panther in 2017, before stepping down as CEO. It was close the acquisition of that mine from Nearstar. And so, we had closed that at the end of June. I stepped down in August. And but I mean, obviously, I like the asset. That's why we acquired it in the first place. And when I had stepped down, I had left the company with $100 million in the bank to redevelop that mine. It was on care and maintenance, and that was the plan. But unfortunately, my successor had different ideas and decided to go to Brazil and acquire a mine there, which ultimately bankrupted the company. But getting back to Coricancha, it was an asset that I liked, and so I tried to buy it off of Great Panther. But in the fall of 2022, it was just extremely difficult to finance anything. There's no one was writing checks at that point, and the creditors wouldn't allow any extra time. So we basically had to pull out of that deal. And then in 2023, I was introduced to an Australian company called Mithril Resources, and they were looking at getting a listing in Canada, and they had an asset in Durango, not far from the Topia mine. And I went to have a look at it. I really like the asset. And so we entered into a reverse takeover arrangement, an RTO, announced that at PDAC in 2023. And given that it was an RTO, our stock was halted. We had been basically told by everyone we talked to, by the stock exchange, lawyers, and so on, that it would normally take about 4 months to go through that process. But unfortunately, that ended up not being the case. And, I'd have to say the lawyers, primarily in Australia, dragged things out to the point where after 8 months, the deal still wasn't completed. And, they had forced both companies to at the point where we just couldn't afford to continue. And so we had to terminate that deal in November of 2023, unfortunately, and just walk away. There was really nothing else we could do at the time, and so we had to sort of regroup once again, and last year found the El Potrero project that we're currently working on. And the one thing I will mention was that Mithril went on, they managed to finance in Australia and then went on to drill that same project that we were looking to acquire, and had some pretty phenomenal results on the first drill program. And their stock ran from 10 cents where they had financed up to about 80 cents on those results. And so, the folks that did invest in that did extremely well. Unfortunately, we weren't part of it, but having said that, it did provide, I would say, some validation as to why I like that project in the first place. It's a very good project, and now with El Potrero, we're back in that same region. We're actually only 65 kilometers from that project that Mithril has, and we're only 13 kilometers from the Topia mine. And it's very similar geology to Mithril's project as well. So we've, in some respects, have almost come full circle. It's great to be back in that same region. It's an area that I obviously know very well, having worked in there since 2003 with Topia and Great Panther, and has a lot of potential.
I was going to ask you about um, Panther. I'm blinking. Great Panther. There you go. I'm gonna blame it on the late hour, but really I shouldn't. But it's Great Panther. Because it went bankrupt. I mean, that's kind of the first thing that I would typically, when I check someone's background, I check what companies have they been involved with,
Hmm.
where are those companies today. I check this one. This one's bankrupt, and I was like, oh, what's going on? But by
Right.
what I'm hearing from you here is that you were not involved in bankrupting the company. Essentially, that's what you're saying.
Correct. Yeah, no, that's exactly right. As I said, we had financed the company in early 2017 for the acquisition of the Coricancha mine, and the plan was to bring it back into production. So when I stepped down in August of that year, the company had $100 million in the bank and no debt. And that was the plan going forward. But they went on from there and acquired a mine in Brazil that, through a combination of various factors, essentially ended up bankrupting the company. And they tried to hold on as long as they could, but I'd have to say, looking back, COVID did play a bit of a role in that. With supply chain issues, contractors, and so on, which drove the costs up. But they were just in a position where the costs were higher than the gold price, and so they were losing money. And once that happened, they basically breached the covenants on their gold loan, and the creditors called it, and that was it. They filed for creditor protection, and they were done. So I was completely surprised by that at the time, and I was still at that time. I still owned more shares than all the insiders combined. I took a pretty significant financial hit on that as well. So, it's something that's for anyone that thinks that I was associated with that in any way, it's clearly not the case.
Hmm. Well, that's actually good to put it out of the way at the beginning. I was kind of saving it for the dessert of the barbecue, but it's good to have it in the smell test before we actually get to grilling. Team experience, and what I'm looking for here is specific experience for the task at hand. Have you worked? Well, you just told me about yourself, but has your team worked in similar geologies in similar parts of the world before?
Yeah, so I guess there's two ways of looking at the team. You could look to our board, and so we have two gentlemen in Vancouver, both coming from the financial side. They have their own accounting practices in Vancouver. One is our CFO, and he acts as a CFO, and provides accounting services for other junior companies, some of which do work in Mexico as well as other jurisdictions. He's got background there, and the other Ron Schmitz is. He's chair of our audit committee, and a great guy to have there from a corporate governance standpoint. The two other gentlemen, uh, David Solari, who's I think our longest standing director, is a metallurgical engineer, and he has his own consulting practice in Toronto. And he's actually, his firm is building two plants in Mexico at the moment. So, they're working with the rest of the team from those companies, Vancouver-based companies, and or I should say Canadian. I think one of them's perhaps not Vancouver-based, but at any rate, so he's, as far as starting up new plants, which we're hoping to do at Potrero, David certainly has the background to do that. And the fourth gentleman, Colin Jones, is actually, I guess you could almost say world renowned in some respects. He's from New Zealand, he's a geologist, very highly respected. He's a partner in a Perth, Australia-based fund called Arimco, and so I mean, Colin travels the world looking at different deposits, for investment purposes for the fund. But in a prior life, I guess you could say he was working with Freeport McMoran, and was the lead investigator when they uncovered the Bre-X scam in the late 90s. And so Colin was actually in the Jakarta airport waiting for that fateful helicopter to arrive, with their geologist, and of course, he wasn't on the helicopter when it arrived, and that remains a bit of a mystery to most people to this day. But Colin has actually been interviewed by Hollywood producers and writers and so on, for the role that he played in that whole thing, and of course there have been movies made and books written and all of that. So Colin's a very, very highly respected geologist, and it's great working with him. And he's been down to the Potrero project. He likes it. I took him to Mithril's project actually, early last, no, it wasn't last year, now 23, and he's still a technical advisor to that company. He stayed on, with them. So the board itself is very highly qualified in a lot of ways. And as far as putting together a team in Mexico, having worked there now for almost 30 years, I've built up a fairly substantial network. And one of the things with Great Panther was that, at its peak, we had a total of about 1,200 people, employees and contractors at the various mines. And um, I don't think we ever had more than one expat in the country at any given time. So everyone we had there was Mexican, and we're very proud of that. That's I think we gained a lot of respect within the country for that reason. And so we've started out doing the same thing again. My uh, uh, our exploration manager at the moment, and the fellow who wrote the 43-101 report for us on the Petro project, Jorge Ortega, used to be our exploration manager at Great Panther. And he's brought on a couple of geologists that used to work for him. And this the project actually was introduced to me by a fellow that used to work within the mines ministry within Mexico, and that I met many years ago, with Great Panther. And so when I was reaching out to my network looking for a project, Juan Jose brought this to me, and just kind of went from there. And so it's the ability to tap into that network in a lot of different ways. Our lawyer there I've worked with for 20 years. He's based out of Mexico City, very highly regarded, teaches law at the local university. And he brought in an accounting firm that he often deals with in Monterrey, Mexico. And so working with them now as well. So, setting everything up in country, and with a complete Mexican team on all fronts. So there are no expats working in Mexico at this point in time.
It's interesting. You should probably introduce me to Colin if he's up for it. We could do a podcast on what to look out for, maybe even to this day. But I'm reading about it right now on Wikipedia. It says something 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 quote a week later on March 26, 1997, which is right about the time when I was learning how to use the potty, the American firm Freeport McMoran, a prospective partner in developing Busang, announced that its own due diligence core samples led by Australian geologist Colin Jones showed insignificant amounts of gold. Fascinating, still a fascinating story to this day. I've
Mm-hmm.
seen the movie multiple times, and it doesn't do it justice. I think was it the BBC did a very good podcast on it, which I think is also great. So
Mm-hmm. Mm-hmm.
anyways, interesting story. I was actually not
Yeah.
aware that Colin is in there. Um, I think who plays him in the movie Gold? I could probably look that up. That's not the point, actually. I think it's played by the tall bald guy. What is his name? Corey something something. I could look it up. Anyways,
Yeah. I can.
it's
Yeah, I don't remember the names myself. Yeah.
it for Pinnacle, or going back to Pinnacle here, Bob. Insider ownership is recorded at 14%, although that may
Mm.
change, I'm assuming, after recent financing. But how much of that 14% is you personally? And again, more importantly, did you get founder shares in this, or what's the average price that you've paid for your shareholding?
Yeah, so okay, multiple questions there.
Yeah,
The last one's easy and quick answer. No, the company was founded in 2006.
right.
I didn't join until 2018. So I've paid for every share that I have. And But to be honest, I don't really track it. I mean, I probably should. I'm not sure. We had to do as part of the RTO. with Mithril that we announced in 2023, we did a 6-to-1 share consolidation at the start of that process, and so most of the shares, well, maybe not, but quite a few since then, but certainly quite a large number were purchased before that. I'm honestly not sure what my cost base would be, but most certainly higher than it is now. But having said all that, the insider ownership has actually changed, and that's something that I actually need to do is to change that. Excuse me, on the website and the presentation, because that's just as of last week, and all the documentation was only just completed and filed on Monday, I believe, just like 2 days ago, and whereby our one of our largest shareholders purchased additional shares in the market on a private transaction, and that has taken him to 11%. And so that put him, in the position of being an insider. So our insider ownership is actually now 25%. It's gone up, quite significantly,
Hmm.
and of that, I own just under 8%.
Right. Who's that significant shareholder that you're talking about here?
His name is Michael Kott,
Oh, okay.
Kott.
Okay. Is he? I think I've met Michael before. Is he?
Possibly, he's based in Munich, Germany.
Okay, yeah, then I know who you're talking about. The presentation also says that at the time it was 46% of the company is closely held. What
Mhm.
does that mean? I suppose, well, that 11% that you told me about held by Michael Cott, that's part of that closely held, but who
He,
owns the
he
rest of
would
those shares?
Yeah, he would have been part of that prior to
Mhm.
becoming an insider. So I've shifted that percentage over now. So closely held now, I would consider to be about 35% after the last financing, and so we really only have about 40% that's sort of in the public float, if you will, and and the rest of it just people that have come on over the course of the last number of years, primarily, some guys that were involved in the company in earlier days that are still shareholders, and there's no um, there are a couple of individuals that would own, maybe sort of somewhere around 4 million shares, but nobody larger than that, and there are no major funds involved or anything. I mean, this is still fairly early stage, more of a type uh, retail type story as opposed to institutional at this
Yeah.
point.
Yeah.
So yeah, so we don't bother trying to figure out institutional holdings because it would be relatively small.
Hmm. Do you typically invest in other junior mining companies yourself, or, well, anything really outside of the space? And why I'm asking you that is because I'm trying to figure out how important the investment in Pinnacle really is for you.
I do. Too much so, probably. I've been trying to pare it back a little bit, but I haven't added up the total recently. But I'm guessing in the total space, including seniors, I'm guessing maybe 40 companies, somewhere that in that range. The more senior companies I keep in my retirement savings plan, and because they're a little bit more stable and pay dividends and whatnot, and then I've got my well, maybe my play money, I guess you could say, with the juniors, and I do own quite a few junior mining companies, and I try not to invest outside of the mining industry. I'm a big believer in sticking to what you know, and so I partly just out of interest, I'm um, I'm much more likely to follow a company if I'm actually interested in what they're doing. Whereas, somebody in a different sector entirely that I really don't have much of an interest in, just because a broker, pitches me on it and tells me it's a great deal, and it's going to the moon. I'm not going to do that. So I typically don't invest outside of the mining sector.
Right. Why I'm asking that is again because I'm trying to figure out how big part of your portfolio pin is. How important is this investment that you've made in this company to you?
Well, it's very important from from a financial standpoint, I guess. I mean, you can figure it out that what is it? My It's all public information. Shareholder ownership is somewhere more than 6 million shares, anyways.
Mhm.
So even at 4 cents, that's still a pretty substantial investment. And as I said, my cost base is considerably higher than that.
Yeah.
I'll give you a little bit of an idea of how important it is from a financial standpoint. But beyond that, I've never really been in this business for the money. I'm being a geologist by training. I've always loved the technical and the business side of the industry, and that's what really drives me is the opportunity to find something, to build something, to create something, and that's why I'm really proud of what we did at Great Panther, from concept to mid-tier producer, in the space of 13 years. And what really brought that home, even to me personally, just recently, was flying back into Topia just in December, and walking around the streets of that little town, because when we first went in there in 2003, it really was a sleepy little village. Maybe 3,000 people, in the surrounding area, and not much going on. The mine was closed. There was really nothing else happening, and and then once the mine started back up again, started hiring people, and going back in there now, the town is just bustling. And there's a sign at the edge of town saying that the population is over 9,000 people. So it's tripled in size in the last 20 years, pretty much because of that mine. Because there really isn't anything else. Everything else, it's very much a mining town. And so, when I walk around and I see that, and I look at the way the contribution that has made to the local economy, to the people, their lifestyles, the school, medical facilities, all those kinds of things. Because this is a remote area. I mean, Topia is literally at the end of the road. If you want to continue past there, you got to back up and drive out 20 kilometers and then take a different fork, because once you get to Topia, that's it. It's pretty much a dead end. So it's it that's been huge for that town. So knowing that we did that is just I mean, I felt such a huge sense of gratification from that. It was terrific, and that's the sort of thing that really drives me. I mean, I don't. I'm past retirement age now. I don't need to be working, but I am, because I love doing what I do.
Right. I want to move away from the smell test and actually do talk about the assets that you see here excite you. One last thing quickly. You or any of your board members personally own a royalty on any of the projects that you currently have?
No,
Okay,
we
got
don't.
it. That's how I like it. Well, let's do talk about the assets. First of all, starting off maybe with the you've got three of them. They're in different jurisdictions and they're different stages of the mining cycle. Again, as I mentioned at the beginning, one of it is in the Red Lake is early stage. The other one is a past producing mine, and then in Mexico, it's a new asset that you've picked up. They're all different stages. tell me what the strategy is there with having those three assets at the same time. I understand you kind of want to start small, build it, and then build a production company through cash flow. But what
Mhm.
is the why three assets at the same time? What's the priority?
Well, with the junior company, you often have to be somewhat opportunistic, and I was trying to think ahead a little bit, and when I got involved with New Range, I didn't really like the idea of just being a single asset company. So I wanted some kind of a fallback, and so I had that sort of in the back of my mind, but these projects came about not by accident, in the sense that I've worked in the Red Lake area since gosh, I'd say early mid 80s, when I was working with Newmont, up in Ontario, and so I gained familiarity with the region, and then following on that with Placer Dome, and of course Placer had the Red Lake mine, the Campbell Red Lake, and that was later taken on by Goldcorp and so on. But it's yeah, so it's an area that I've always liked, and when was it now? Um, I would say late no, early 2000s. I acquired some land up there, just staked claims on my own because I like the geology. And well, I optioned it to an Australian company that did a bit of preliminary work, but never got around to drilling it. And it was based on what we call an iron formation model. And iron formations make terrific hosts for gold mineralization. And I was kind of introduced to that in early 1990s when I was working with Placer Dome, and I worked on the pre-feasibility study for the Musselwhite mine, which is another almost 300 kilometers north of where we're working. And at that time, I led the geological team that developed the geological model for the Musselwhite mine. And then that was in 1994. They brought it into production in, I believe, 1997. And it's still operating today. It's, I think, past production and reserves is probably more than 8 million ounces now, and Newmont has just sold it. Newmont ended up with it through a series of takeovers, and they've just passed it on. But at that time with Placer Dome, I spent about a year researching iron formation hosted gold deposits around the world.
Mhm.
And so it's a geological model that I became very, very familiar with, and so it was using that knowledge that I acquired this claim block in the Birch Lake area. But at the time it didn't go anywhere, and the claims lapsed, and they were picked up by others, and then around about that same time, early 2000s, I was working with another junior company that acquired the Argosy mine at that time. And we went on to acquire 100% of it. And we did drill it and proved that the mineralization does extend below the old mine workings, which only went down 270 meters. Very high grade, almost 13 grams per ton gold, and it closed in 1952. And we saw the opportunity there, but at that time it was still very difficult to raise money for that type of project, and so it just kind of sat there dormant for a period of time. And then that company, which was a sister company to Great Panther, ended up being acquired by Great Panther for other reasons, for a project in Mexico. But nonetheless, so that project came into Great Panther's stable. And but because Great Panther was focused in Mexico, it sort of sat there as a bit of an orphan.
Hmm.
And so I went back to Great Panther, um, gosh, maybe around 2021, I think, or 2020, and and negotiated an acquisition of the Argosy mine from Great Panther, and I just thought that it would be a great fallback, or sort of a second rank company behind the one that we were working on in Nevada, and so yeah, I mean, we picked up the Argosy mine at that time, finalized that acquisition in 2022, and then the project next door, around about the same time, I'd been negotiating to acquire that, initially as an option, but acquired 100% of the North Birch project. And it's not quite contiguous with Argosy. It's the two property boundaries are only about 300 meters apart. So it's not even a full claim width, but they're very, very close, and but different geology. The Argosy mine is quartz veins in greywackies and sedimentary rocks, and the North Birch project, as I say, is more of an iron formation model, structural model, and so they're quite different geologically, but very close. And both of them are within 10 to 12 kilometers of the Springpole deposit, which First Mining is developing. And, that's about 5 million ounces of gold. And that's the largest known deposit in the Birch Lake Belt. The Argosy mine, I believe, was the largest past producing mine. But it's an area that, largely due to lack of access, has never really seen a whole lot of exploration. So, both Argosy and North Birch are well positioned, and they've, I think, got great potential. But it has still been challenging, even though, Red Lake itself has a great address and a great history in terms of production and so on. It's And we're not right in the Red Lake Belt proper. I mean, we're in the next greenstone belt to the east, which is the Birch Uchi Belt. Um, it's still very, very difficult to raise money for exploration up in that neck of the woods, and so, not being able to aggressively get back into that area and start to explore those assets in the last year or two, that was where we sort of pivoted to this business model of, a past producer and getting back into production, and you can do that far easier in Mexico than you ever could in Canada. I couldn't take a mine like Argosy, which is a past producer, produced about 100,000 ounces, but as I say, it closed in 1952. But there is no way that we could get that mine back up and running in 2 to 3 years, the way we think we can with Potrero in Mexico. It just wouldn't happen. So, with that in mind, the goal now really is to try and advance the company within Mexico with that business model to get to a point where we can actually generate our own cash flow, and then use that to go back to Ontario and start to develop those projects, at that time. So, it's unfortunate that we might have to just put them on hold for a little bit. If we can, spend a little bit of money up there and keep the projects moving along a little bit in the interim, that would be great. I'd love to do that. But we own both projects 100%. There are no holding costs on either one. And so no payments to be made or anything like that. And we've done enough assessment work on North Birch to keep us for another 7 years or something like that. So, and Argosy is patented, so we own it outright. So, yeah, I mean, we can afford to basically sit on those while we develop things in Mexico, and then hopefully at some point we can go back and develop the Ontario projects as well.
What well, I shouldn't say worry, but what interests me here really is that the business premise here rests on or is dependent on you being able to generate cash flow? And although it's very early stage now, and this is very forward looking, how long will it
Mhm.
take you to get to that stage? And more importantly, how much money is that going to cost you to get there?
It's uh, well, I guess the simple answer is if you think of 2 to 3 is a simple answer, and I mean that in both in time frame and financially. Because of the size of the plant which is there, which is we've been told around 100 tons per day. It's not huge, and most of the basic infrastructure is there. So we'll need to replace some of the equipment like crushers and pumps and that sort of thing. The electrical work has been sitting for 35 years, but we're probably between that and rehabilitating parts of the underground. We're really only looking at about $2 to $3 million. And then with some drilling thrown in there as well to drill off that area, and all of that within about a 2 to 3 year time frame. So that's when I say, just think in terms of 2 to 3, because 2 to 3 years, 2 to 3 million in terms of US dollars, and that's what we think at present. Now, as I say, that's very much a forward-looking statement, but it's that's kind of what we're projecting at the moment. And now, I mean, we don't have enough information right now in terms of detailed costs or either by way of capex or opex, and until we complete some drilling to have a better sense of grade and recoveries and things like that. So obviously, there's a lot of work that needs to be done, but so I can't say with certainty, when or if or how much cash flow we'll be generating. But that's the goal, and that's roughly the sort of time frame that we're currently aiming for. So we'll obviously update people as we go.
Mhm. How do you kick it off from this stage onward, though, and specifically within the context of money, of course, because raising capital at this market cap doesn't sound like the easiest of tasks to me. So, how do you finance it from here on out?
Yeah, it's certainly been a challenge, and the equity markets in North America, shall we say, or well, no, I shouldn't say Mexico is part of North America, so let's say Canada and the U.S. Are still extremely difficult. But I mean, fortunately, I've got a good network in Europe, and most of the money that we've just raised came from Europe.
Mhm.
And I also brought in a couple of, you could say, strategic investors from Mexico as well. Some successful Mexican businessmen in the mining industry. And so uh, yeah, I mean that's largely where the funding came from. So in times like these, you're always looking to sort of think outside the box in some ways, and just if you're just trying to keep trying to go back to the same well, knowing that the well is dry, you're not going to get much out of it. So always looking for different ways to approach things, and that's another thing about a model of getting into production, that if we get this far enough along, then we can start to consider things like offtake agreements, gold loans, streaming arrangements, royalties, whatever it might be. Not that I'm necessarily in favor of all of those, but just saying that those options are out there, that are not the sort of thing that a pure exploration company can go after. Those are not sources of financing. So it does open the doors a little bit for us. And so, I mean, going forward, it's we sort of gear our marketing strategy towards that, and just trying to get more exposure for the company since we did just change the name a year ago. So a lot of people are probably still unfamiliar with who Pinnacle Silver and Gold really is, and what we're trying to do and so on. So right now, a lot of it's just about exposure and trying to get the name out there and try to ultimately build some momentum as we generate news.
Well, what I'm hearing from you though is that you still want to mostly finance it through equity. Like you're not considering any asset level deals. Essentially, you're not looking to give away any of the upside. You want to keep it to yourself. Am I getting that correctly?
That's the current thought. Yeah, I mean, if push comes to shove, then obviously we'd have to consider that. But if we can hang on to our existing assets and just focus on equity in the short term, I think after about a year or so, I think we may be in a better position to start to potentially talk to some people about something like an offtake or a gold loan or something like that.
Right. And you're talking about a year from now?
Yeah.
Okay. Well, let's talk about the properties and how or why you think they can get there that quickly, essentially. And then you say the Mexico here is the focus. So let's start there. Tell me more about the history of the asset. I know you kind of touched upon it there for a second, but who's owned it over the years? What work has been done on it, if any? And maybe more importantly, why would anyone let it go that cheaply if it's as prospective?
It's been under one owner effectively for about 40 years. And that gentleman is the one who built the plant that's there now, or what's left of it. It does need to be refurbished, but and he had it in production in the late 80s for a short period of time. But he is a mining contractor. I believe he's a mining engineer, and he has worked in that area for about 40 years. He actually has another operating mine only about 25 kilometers away from there. It's a polymetallic mine, about 150 tons a day, I believe. And and this gentleman's, he's in his 70s, and he doesn't run his contracting company as much as he used to. And So he's focused more on the mining side of things, and he's wanted to get this asset back into production for some time now, and I think that's one of the key reasons why we were able to do this deal, where perhaps others were not. Now, I don't know for certain, what happened in previous negotiations, or who's he's spoken to in terms of other companies, or how those negotiations went. But just based off of my own conversations with him, and sort of seeing how things progressed, and where his focus is, he's very much focused on the production side of things. He's not really interested in doing a deal with a junior explorer who just wants to come in, drill a bunch of holes, try to build up maybe a bit of a resource, promote the stock, and then who knows what happens after that. And similarly with a larger company who would come in and maybe perhaps try to advance it. Maybe they would basically want 100% of it right up front, and he would be cut out of it again, and they're not likely to want to pay very much up front either. So it's a different sort of scenario, but either way, he doesn't see any production, and that's really what he wanted. Whereas when we met, and I made it clear that's exactly what I did want to do, was to get into production quickly. And so the two of us kind of meshed in terms of our goals and our focus on this project, and trying to move it towards production as quickly as possible. And I think another thing that we had going in our favor was just the fact that I've worked in that area for 20 years, in the Topia area, and I know the community. They know me. Great Panther, even though it's no longer around, and sold that asset, the company still has a good reputation there, and people know that that community tripled in size largely because of what we did there. And so I think having that familiarity with that area also played a role in our ability to negotiate a deal on this asset. And um, and so so knowing that, we were able to negotiate a deal structure that worked for both of us, where we couldn't, if we did a standard option agreement where multi-year type thing, 3 years, 5 years, whatever it might be, which is usually on a sort of an all or nothing basis. You make annual payments. Maybe you have a work expenditure every year, and commitments, and you do all of that right up until the last blowout payment in 3 or 5 years, and that's when you get 100%. I I told him that I couldn't really justify doing that if part of that was building a plant when we didn't own any of it. And I wasn't going to build a plant and put it into production, unless we had a piece of that. And so basically, after a bit of back and forth, what we settled on was that proceeds 50-50. So, whatever cash flow we might be generating from that point going forward, that's evenly split between the two of us. And then, we can gain another 20%, taking us to 70 by making $1 million payment to him and issuing some shares. And then get to 90% with a final blowout payment of $3 million. But those subsequent payments, will be in production at that time. So, the concept there is that we would be making those payments again out of cash flow, not from an equity financing, which, I don't know how often I've heard people say, oh, I'm not going to finance this if it's just money going into somebody else's pocket. And I totally get that. And in times like these, that you hear that more often than not. And so, if we can finance this acquisition as well as the development of the project, because we will keep drilling and trying to expand the resource, through that entire time. If we can do as much as possible of that out of cash flow, then that minimizes shareholder dilution as much as we possibly can. And to me, that's fairly crucial. And I mean, on that point, I'll just point out that with Great Panther, after 13 years, when I stepped down as CEO, we still only had 165 million shares on issue. After 13 years, 3 mines in production, 1,200 employees, and at its peak, a $600 million market cap, and with $100 million in the bank. So I've always had a very strong focus on shareholder dilution and trying to avoid it as much as possible. These are different times, of course. Starting the way the market is now, and with a 4-cent stock, and where we're currently set up with our share structure and everything, it's just it won't be possible to repeat that exactly, but the approach and the attitude is still there to try and minimize that as much as we can.
What happens if you reach a certain percentage of ownership here, say 50%, but you cannot make any of the further payments for whatever, I don't know, operational reason it might be? Is there something in the
Yeah.
agreement to protect you from, spending money on it without retaining any ownership?
Absolutely. It is, that's why we call it a staged option, because it is an option agreement right up to the very end. And so even after we've achieved 50%, we've got it in production. If we, let's say worst case scenario, at that point, we do a bunch more drilling, just decide that it's not what we thought, or perhaps we've moved on and made another acquisition. It's something bigger, and we want to focus our efforts elsewhere. It's completely at our option to sell our 50%. we would the owner would have a right of first refusal on that. But yeah, I mean, we can sell that 50% and move on, or we can just leave it as is, 50/50, and just continue to operate it.
Right, right. What are the immediate next steps here? What happens here next in Mexico?
Well, we've just started to work on the project. The guys, we brought in a local contractor to start rehabilitating the underground workings. We've got another one coming in within the next week, I would say, to work on the balance of the mine and the workings, trying to spread the work out a little bit between different contractors. And once they have done that and made the underground workings safe for our geologists to go in there and systematically sample, the veins that are exposed, then the guys will get onto that immediately, and they've actually started taking a little bit, but. And in addition to the underground workings, they'll be mapping and sampling on surface, and taking surface samples there. We've already cleaned up the road, the access road to get in there. We'll be cleaning up the plant sites. You can imagine after 35 years, it's a little bit overgrown. So get some guys in there with machetes and chainsaws and just try to clear that out. And then we can do a better assessment of the plant itself, and we'll have our director Dave Solari and his team go in and do a complete and thorough assessment of the plant, and decide what it needs and how much it's going to cost and how long it'll take, and all that sort of thing. And What else? We'll be flying a LiDAR survey at some point this year. And LiDAR, for any of your listeners or viewers that aren't familiar, is light detection and radar.
Mhm.
It's You can think of it almost in the sense of an airborne laser survey that effectively looks through the vegetation and the overburden to the rock surface, and can map out that rock surface, including structures and the shape of it and so on. And given the importance of structure in these types of deposits, it's critical that we get a good understanding of the structural controls on these veins. And if the LiDAR survey can help us with that, then it's a really powerful and useful tool. So we'll be and we did actually use that up in Red Lake, in the North Birch project, and proved to be highly successful up there, where there's very little outcrop. And so so yeah, we're looking forward to that survey at some point this year as well. And then, of course, ultimately, that'll all be within the next 6 months or so. And During that time frame, we'll be working on getting applications and permit applications for drilling. Hope to be able to start drilling in maybe about 6 months' time. And we can even start to do some baseline environmental type studies that will be important going down the road a little bit when it comes time to apply for for an actual environmental permit for the mine itself. And I mean that since we're on that, I mean that may be a question that you were going to ask. Excuse me. Anyways, but as far as permitting goes, and in Mexico in recent years, there has been, talk of permitting issues, and no new permits being issued, and talk of banning open pits and that sort of thing. The new administration there is starting to walk back on that a fair bit. It's my understanding that they're not going to ban open pit mining, and that permits will they'll be starting to grant those again, starting with the ones that have already been submitted and have been sitting on the shelf for a while. So they'll try to get those out to companies, going forward. But for us, the fact there are several things working in our favor. One, it's underground. So it has a much smaller footprint than an open pit mine would have. Secondly, it's a past producer. There's plant infrastructure already there. All the foundation, the framework for the plant, some equipment, conveyor belts, all that sort of stuff. Even the remains of the camp and office buildings and all that sort of thing. It's already there. So it's what we might consider a disturbed site from that standpoint. So it's not, we're not talking about virgin territory here where you're worried about what tortoise you might find or a rare bird species or something like that. This is already a site that has been permitted previously, and so a lot of that work has been done, and we will need to update it certainly, and we will do that. But I think, and given the size of the operation as well, it's only going to be about 100 tons a day, so it's not a massive site or anything like that. So I mean, these things are all working in our favor. Plus the fact that Durango is a mining friendly state to begin with, and even though a lot of the regulations are federal, if you've got the state behind you, then that certainly does help, and as well as the fact that the communities are behind us as well, because in order to get any permit, you need to have community agreements in place. And the last thing I'll mention on that regard is that the plant and the mines actually sit on private property. They're not on community property. And this is private property that's owned by the vendor of the mining concessions in the first place. So it's the same guy we're dealing with. And so we're just in the process of putting all that documentation together so that we can actually have a proper formal agreement in place for the surface rights as well as the mining rights. So having all of that means that we won't be impacted right at site by any of the local communities with whom we plan to establish a good relationship anyways.
How close are those local communities to you, or what? But essentially, you're saying there's nothing that could happen. You would just go and talk to them for good practice, essentially.
Yeah. At the moment, I mean, we're staying. The closest village is about 3 kilometers as the crow flies, a little farther on the road, and that's where we're establishing ourselves right now. Renting a facility there, and that's where our guys are going to be staying and driving back and forth every day. And so already talking to some of the locals there, hiring people. So even though we're not on their land, we are already establishing a good relationship, and they're quite happy to have the jobs and so on. So that's all very positive. One of the ejidos in that area is actually the Topia ejido, with whom we had a good relationship, back with Great Panther. So I don't see any issues as far as uh, as talking to them again and getting something going there. And so yeah, it's really just a matter of letting people know what you're doing, and if you can provide jobs or some kind of economic benefit for them, then that's obviously a plus.
Hmm. How's the security situation there? Because I believe you're kind of on the border between Durango and Sinaloa, if I saw that correctly on the map.
Yeah,
Any security concerns, or what does that look like? And with everything that's going on in Mexico.
it's yeah, you're correct about the location. It's one of those things. Having been in there for the last 20 odd years, we never had an issue of that nature while we were there. And, I'm not aware that Guanajuato Silver has either. But it's one of those things where you just have to be very aware of your surroundings and what what the situation is. You mind your own business. We're minors. We're not there to police anyone or anything of that nature. Typically, they leave us alone, and it's just never been an issue. And they're also interested in keeping the locals happy and employed and so on. So, it's a funny sort of relationship. I guess maybe a symbiotic is is the closest word. You just yeah, you just go about your business and just do what you do. But we've never had we've never had any issues.
Right. How much money are you budgeting for the work that you want to do in Mexico this year?
Well, I mean, the when we did this transaction, it was called a fundamental acquisition by the exchange, and the fact that we were trading under 5 cents also brought another set of rules into play, such that we were basically capped on the amount of money that we could raise. And in fact, they even gave us a bit of an exemption on that to allow us to raise, the full 800,000. And so, that'll be enough to get things going, but it won't be enough for drilling. So, we will need to go back to the market for a drill program at some point. But we'd like to obviously get the share price up a bit before that happens.
What are the drill costs there?
Typically for a project like that, you'd be looking at a small drill, and probably somewhere in the nature of $150 US a meter.
That's without the assays, I'm assuming.
Um, Not necessarily. That could include assaying.
Hmm.
I mean, we haven't actually gone out to contractors just yet. I'm actually going down to Mexico in a couple of weeks to a mining conference, and there will be a number of drilling contractors at that conference. That's part of the reason why I'm going, and so I'll be talking to these guys and getting a better sense of costs and availability and that type of thing. So
Hmm.
I'll get a better sense of it at that point. But I think that's a assays are really not a huge component. Of that type of program. So a lot of bit, but not a huge amount.
So what are you thinking in terms of news then? I mean, you say you're going to have to raise again, so everything is financing dependent here, but when can we start seeing some assays out of Mexico?
Well, our guys, as I say, we just started in there 2 weeks ago, and they came out for a bit of a break and some supplies, dropped off a bunch of samples at the assay lab in Durango on Monday, and so if depending on how long they take to process those, we could have results back in a few weeks. Now, they weren't a huge number of samples from that first pass, but we'll get some guys going back in there and then continue on with the underground sampling. So we'll see how they come out and whether it makes sense. I don't always like to just put stuff out piecemeal unless it's relevant. And so, we may wait until we've collected all the assays for, any one particular mine and then put them out together so that it provides some context. So it's difficult to say exactly, but I will try to keep people updated as much as possible, and even with the development work that we're doing, like the fact that we're rehabilitating the mines, making them safe for the guys to get back into, cleaning up the plant, and doing an assessment, of that, and so things like that. I'll try to put out some news just to let people know what's going on.
Right. What about Canada or go see what's the What's the story there? What's your plan for doing work there this year?
There, realistically, there probably won't be much work done there this year, as much as I'd like to. Just simply for lack of funds and the focus on Mexico to try and fast track that project as much as we can. Because the faster we can get that into production and get to a cash flow position, the better. The better off we're going to be in being able to use some of that money to go back into Ontario and work there. And I mean, let's face it, we also want to take advantage of the metal prices now too. That's one of the reasons why, the producers have actually started to perform reasonably well in the market. Because anyone who is producing gold and silver right now is probably making pretty decent money.
Hmm.
And so that started to reflect on their share price. And I've put a little chart into the presentation, which is on the website, which I ran across a couple of weeks back, and it's interesting to show the 1 year performance of the senior producers, junior producers, and then junior explorers. And the junior producers have outperformed everyone, and that's precisely where we want to be. It's that's where investors really get their leverage to commodity prices. So the sooner we can get there, the better.
Hmm. But you're not thinking of doing any work there this year. You say that's what financing related, I assume, or are there any other challenges, locals permitting anything else that you have to get done?
In Ontario, no, no other challenges really. I mean, the type of work that you would do, access, it is something we have to consider because, there's a winter road to the Springpole mine, and we would branch off of that if we were doing a winter program. But if we go back in the summer, then it would be supported by float planes and helicopter.
Mhm.
So it would be a little more expensive, to do that. Mind you, I mean, most of the moves and so on would be relatively close. So we try to minimize it. It's not like working in BC or the Yukon or something, where you have extreme topography. It's still pretty flat in that part of Ontario.
What's your timeline for doing the work there, though, and how important of a part would it really play in you restarting the mine and that whole concept to getting to cash flow and building the company that way?
Well, you're talking about the Argosy mine, the Ontario projects?
Yeah, yeah, yeah.
Yeah, yeah. I Our strategy on Argosy has never really been the same as in Mexico, where we want to bring it back into production ourselves. What I mean, certainly I like the aspect that it's a past producer, but just knowing the timeframes involved in trying to do that in Ontario, and knowing that we are close to Springpole, the strategy has really always been to prove that there's something more there. As I say, the old timers only mined down to 270 meters, and when you're working in the Canadian Shield, these deposits will often go for thousands of meters vertically, and that's usually the greatest dimension, of any deposit in Canadian Shield is vertical. And so, if we could get back in there and prove up a bit of a resource and show that continuity and show that it's continuing, which we know it does because it has been drilled below the old workings. I mean, as I mentioned, I was CEO of the company that did that drilling, so I'm quite familiar with the geology, and that was back in 2004, 2003. So I know that potential is there, and so if we can get that to a point where where we can really demonstrate that potential, then I think at that point, that's when we could look at monetizing that asset in particular. And right next door at North Birch, even though we were only able to drill two holes when we went in there a couple of winters ago, we did demonstrate that there is a fairly major shear zone structure going through the middle of the property that showed up really well on the LiDAR, and it shows on the magnetic survey as well. And one of the holes that we drilled, drilled through that, or not even all the way through it. Excuse me, we reached the limitation of our drill at the time, and to the point where when we go back into drill it, we would come at it from the opposite direction because it's fairly steeply dipping, and we were getting, not only were we seeing the structure, but we were seeing alteration. We were seeing quartz veining, calcite, lots of carbonate alteration, little bits of copper, some weak gold mineralization, the lots of pyrite mineralization, and the iron formation itself was intensely folded the way you would expect it to be. So we had all the right ingredients, for some kind of gold mineralization, some kind of a gold deposit, and but we only got one hole into it. So it was what you might call a technical success in that this horizon had never been drilled before, and we went in there with that geological model and all the information that we had, and it doesn't outcrop. It's underneath a stream which follows the structure, and we tested it, and it worked. We found pretty much what we were looking for, and but in these types of systems, the grades are not nicely evenly distributed over a large area. When these things are structurally controlled and often hosted in veins and so on, you have to figure that out, and you have to know where the ore shoots are, where the best grades are, and again, those are structurally controlled, and so you have to drill enough holes to figure that out. So that's really the next stage there, is to go back into North Birch and drill some more holes to really try and pin that down. But I think there's potential there for a fairly major discovery, because we have 8 kilometers of that 8 kilometer strike length of that particular horizon, and none of it's ever been drilled before.
When's that work happening, though?
I don't know. That's the thing. I mean, it'll largely be dependent on funding. If there comes a time when there's maybe more interest in that part of the world, make it easier to raise a bit of money for it. Otherwise, we'll have to just continue on with the model that we have, and try to get Mexico into production, and then funnel off some of that funding for Ontario.
Hmm.
I mean, I'd love to get back in there. Don't get me wrong. I'd love to get back in as soon as possible. But at this point in time, it's just not really feasible.
Hmm. Why not option them out or sell them? I mean, this
That's
yeah.
Yeah, we may do that at some point, but for now, um, yeah, I'd rather not. I mean, there are still not a lot of companies working up in that area, so I mean, even to option them out to someone else, it sort of begs the question, well, who are you going to option them to? If certainly any other juniors are likely to have the same difficulties, raising funds, and it depends on what kind of a deal you can do. I mean, I'm still as I said, I first staked that ground back in 2001, I think. So it's a little bit of a pet project for myself, and having that information model that I worked on for so long. I'd as an exploration geologist at heart, I'd love nothing more than to make a new discovery up there. So I'm not quite ready to let it go to somebody else just yet.
Hmm. And
Maybe a
that's
bit
true
selfish.
for both of your projects, I assume, up there.
Yeah, well, Argosy, it's that one's a little bit different in that it's a smaller project. It was a relatively small mine, and even though it does have potential to go to depth, it's not like to be a world-class mine, but it is high grade, and it's the sort of thing that will ultimately be attractive to someone, especially I mean, I haven't run the numbers recently, but at $3,000 gold, and if you could mine that at even 10 grams per ton instead of 13 when it produced before, that's you could probably make a nice little mine out of that.
Right. Well, if you're not spending too much money there, I don't expect you to be looking for more staff. Like you don't think you're going to be taking on new staff, or essentially where I'm going with this, Bob, is are you going to be growing your G&A?
No, we're not, and anything we do right now is just purely focused on the project in Mexico. And so anyone we take on is going to be initially just on a contract consulting basis, whether it's mining engineers, metallurgists, just contractors to come in and do some of the preliminary work, either in the mines or the plant, that sort of thing. As far as Canada goes, no need to bring on anyone new here. I mean, we have just brought a lady on to handle investor relations, because we need to get out there and tell the story, and that's the only way you're going to raise money. But aside from that, no. I mean, we've always tried to keep our G&A as low as possible. We don't even have an office in well, anywhere in Vancouver. I mean, our corporate address is the address of our CFO's accounting practice, and that's it. And so we have almost no overhead as far as that goes. And so, of course, we've got standard exchange fees and filing fees, audits, all that sort of stuff that every other company has. And when you were earlier on, when you were talking about the financials and pointing to some of the accounts payable and short term, long term, all that kind of stuff. We've gone, myself and our CFO have gone about 3 years without being paid.
Hmm.
And so we haven't taken any salary during that time. We have accrued it, and that's what shows as as long term. We put that into long term payables. So, and there's no rush there. So I mean, it sits on the books, but it's not like it's something that needs to get paid tomorrow. And we have done a couple of shares for debt in the past, and just to try and clean up the balance sheet a little bit. And the financials you were referring to were from the end of October,
Hmm.
and those are about to be updated. In fact, the third quarter ends January 31st, and those will be filed uh, by the 31st of this month. So by next Monday, there'll be a new set of financials out.
Right.
And, that will show that we've started to clean up the balance sheet a bit as well. And we intend to continue to do that in a responsible fashion, and such that, by our year end, which is April 30th, our balance sheet should look a lot cleaner than it does now.
Right. When you talk about marketing here for a second, how much of a cost is that going to be? Because on that financial statement that I went through, the 6 months prior to the publication, you spent about 20 something, I think 22 or 21 grand per month on marketing. Do you have a target cost as well as where is that money going to be spent on?
Yeah, I mean those numbers were a little bit skewed because we did have a couple of fairly large contracts that we got into sort of on an annual basis. So it wasn't like we were making monthly payments or anything. And that was done, I think, in 2023 even, as or early 24 as part of that RTO that we had been working on. So we had thought that we were going to be, moving forward and raising more money and doing a fair bit of marketing and so on. So, that had to be taken care of, but that's gone now. But moving forward, I would say, this year is still not going to be a huge amount, but we will be attending a few conferences and some travel and whatnot. So I would say probably in the range of maybe 100,000 for the year,
Okay.
something like that. So, it's and that may change a little bit as we progress through the year, but not over the top. I know companies that spend 1 million or more on marketing in the course of a year, and which is great if you've got it. But I think to be effective, there is a minimum amount, I think, too, that you need to spend, because if all you're doing is relying on your news releases to get the word out, that's not enough. You have to be out there and doing certain types of marketing. And one of the interesting things now is just trying to figure out just the change in the demographics out there, in terms of who's actually investing in mining stocks these days. Because as the baby boomers retire and move on, and the sort of traditionally that investor demographic, the older people, they're not investing in speculative junior stocks anymore, or they shouldn't be, when they're getting to retirement age, and unless they're pretty well off, that they have a bit of pocket money to just play with. But unfortunately, I've talked to people in the past that that were retired and had, I'll say, gambled all their retirement savings on junior mining stocks, and the market has taken a turn, and they've lost a ton of money, and they were almost crying on the phone because they didn't know what to do. And you just, as a CEO, you hate to hear that, but it's unfortunately a reality. But anyways, that aside, there is a younger demographic obviously coming into the space now, and people like yourself, and we have to figure out how to, not just how to reach these people, but how are they investing. Are they do they have brokers the same way that my generation did, and or do they just do everything on their smartphones, and it's all just a totally different kind of trading. And how much are they buying? Are they buying 1,000 shares? Are they buying $1,000? Are they buying 10,000, 100? And people that are making lots of money on Bitcoin, are they now rotating into the mining sector and taking some of their winnings from digital currencies and putting them into exploration plays, or that sort of thing. So it's very dynamic, I guess, is what I'm saying, and just trying to stay on top of that and figure it out, because that's something, just what we've seen over the last, I don't know, 10 years or so. It's been a fairly major shift in the way people go about investing. And certainly, we've seen it with the silver squeeze and the Reddit stocks and the GameStop and all that sort of stuff, that people are definitely investing in ways that they just didn't do 10 or 20
Mhm.
years ago.
Well, so where do you go to find them? I mean, do you keep going the traditional route of doing conferences? Do you increase your social media presence? What do you want to do?
Well, certainly increasing social media presence is significant. That's something that we have to do for sure. And conferences themselves have changed. Over the last number of years, we've moved from just the standard large hall with a bunch of booths, and gone more into the one-on-one meetings, almost like a speed dating type of thing for a couple of days. And I think you have to do both of those. And then there are other much more targeted conferences that are sometimes by invitation only. And, they may be smaller, maybe they're just a few hundred people, but you might only have half a dozen companies and they're presenting, and you've got a great investor to company ratio. And these are, well-heeled, wealthy people that will write checks for $100,000, $50,000, and not necessarily the moms and pops that you see at the conferences that are still important, but they're gonna spend $1,000 or whatever it might be. So you need all of that. And I think a comprehensive marketing strategy has to include all of that, and because it's certainly not easy out there, and you have to. I think you have to build a bit of a brand as well. I think that was one of the things that helped us a lot with Great Panther was we had a very strong brand, and we actually started minting our own coins. We were one of the first companies to start doing that, along with First Majestic and a few others, and that was hugely successful. And something that people could, something physical that people could relate to. And we would go to a conference in Munich, Germany, for example, where the Germans love their hard assets, and they remember well the days of the Weimar Republic and what hyperinflation looks like, and so they're in there and they're buying gold and silver bullion and pulling out wads of €100 bills, and it was pretty amazing. And we would have our Great Panther coins and bars and wafers for sale at the booth, and often we'd be sold out in the first day. And people would come back year after year after year, and they would buy a few more, and they would buy a few more, and it was just it was a great way to connect with with your shareholders and potential investors. So things like that really help a lot. So now, in trying to develop the Pinnacle brand, we'll be looking for opportunities to do things like that sets us apart from some of the other companies out there.
Bob, we've been at this for over an hour and a half at this point, I think. I don't want to steal your entire day there. What would you consider success if we're talking in, let's say, 6 months? We do an update on Pinnacle. What would you like to be telling me at that point for you to be content, for you to be happy with what you've achieved?
In 6 months' time, that we're starting a drilling program, that our underground sampling has demonstrated the high grade nature of the mineralization and some continuity. That the mines that are there are exposed over about a 500 meter, 450, 500 meter strike length, and but there's been nothing done in between the three mines, so there's no drilling in between those, and we want to drill within the mines, drill off some of the blocks that had been outlined. So if we can start to do that with our sampling, such that we can generate good solid drill targets and be starting to drill in 6 months' time, then I'd be very happy with that. And just moving forward with the plant situation, assessing that. One important thing too that I haven't mentioned actually is that and something that we faced when we actually started Great Panther, when people looked at the Topia mine and said, "Oh, it's 150 tons a day. It's small. It's not going to do very much. It's this, it's that," and just sounded like a bunch of excuses. But they were missing the point. That it was just a first step. This is just a stepping stone. And we look at Potrero the same way. Yes, it's only 100 tons a day right now, in terms of the size of the plant. And even if that's where we start in terms of production, 100 tons a day at a grade of 10 grams per ton gold equivalent will generate 11 to 12,000 ounces a year. And if we can just make even $1,000 an ounce, that's 11 to $12 million a year in profit. For a junior company, that's not a bad start after a couple of years. And if we can do that and continue to build on that, I'm already looking at our next acquisition, our potential acquisition, looking for the next deal. And as I had mentioned earlier, with Great Panther and Topia, we acquired the Topia mine in 2004, and even before we had that mine in production, the following year, 2005, was when we bought the Guanajuato mine, which was a world-class mine. And so you just never quite know where the next opportunity is going to come from. But if you're not out there looking for it, you're not going to find it. And so I'm already rattling the bushes looking for that next opportunity. And Potrero is, as much as I love the project, it's a starting point. It's the first step towards building a company.
Hmm. That is an interesting topic to talk about next time potentially as well.
I
Um,
think.
as in, how do you pick that next asset? What fits your profile and stuff like that? But I really
Mhm.
do appreciate your time today, Bob. What am I forgetting to ask you here at the end? What else should we be talking about?
Oh gosh, we've covered so much. Yeah, I think at this point in time, until we get farther into the project, I think we've covered off on pretty much everything that we need for the moment. And yeah, we can get into more detail a little farther down the road.
Awesome. And that's been Pinnacle, silver and gold, listed as PINN on the TSX Ventures Exchange. Bob, thank you so much for your time.
Thank you, Antonio.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I'm simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So, even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."